Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, January 17th, 2017. Hope everybody had a great 3-day weekend, at least for those of you who were off. For those of you that live outside the U.S., yeah, the markets were closed yesterday. It was Martin Luther King Day, so the financial markets and I'd say roughly half the businesses are closed, the other half are open. So either way, back to business today for me and anybody who trades. So let's dive into the charts. Now, what I'm going to do here is just a sort of a potpourri overview of some of the things that I'm watching and have been talking about lately. This isn't a comprehensive overview, but I wanted to just touch on a little of everything, especially those the trades that I've been posting recently, things I've been following, whether it's official or unofficial. So let's start out with gold. There's always a lot of interest in gold. Gold and the gold mining stocks have just done phenomenal this year so far. If you followed the analysis, this is a support level down here. This was a descending price channel on GDX. I had the buy-in zone, so there was the sharp downtrend line, the falling wedge, oversold, all the other reasons to buy. However, I just today, right before this video, as a matter of fact, I was contemplating putting a trailing stop. Sometimes that's what I'll do on a position, let your winners ride. Try not to book profits early, but I did, at least in one account, my trading account, which is where I had a sizable position of GDX. I took full profits on that, and in lieu of putting a trailing stop. But that's one option. Now, the reason I did that, as you can see here, gold is at pretty significant resistance. This is the GLD. This was a target way back here. That correction that we had back in mid 2016. It was a target again. One of the targets that was hit actually was a short target from up here hit. But most importantly, you can see there's numerous reactions. So I want to move fairly quickly because I want to cover as much as possible. But if you just take a look at this level here and see all the reactions, even to the untrained eye, this may look like prices just fell through there, but when you zoom in, you can see the reactions. When I say reaction, we have a candle, you had a little doji there, we bounced for a few days, hit it again, bounced that day, closed above it, finally broke below, and in trading, once support is broken, it then becomes resistance. So you can see as we zoom in, look at these candles up closely, you can see after we traded below there and closed below there, every attempt to get back above was met with a failure. Now forget about these intraday, these wicks and tails, or they're also known as shadows on the candlesticks. All that really matters is a daily close. So yes, you could say we are above 115.70, however, albeit by a very small margin, and it is a significant level. Gold is getting there. We're right about at that 70 level, so we're not technically overbought, although close enough, 69 point something. But we've moved up from a very oversold to an overbought reading with very little give back at all. So at the very least, my expectation, even if we went up for another day or two and remained above that 115.70 level, my best case scenario right now is gold probably has to consolidate, take a little breather, very likely backfill this gap, and more than likely come back in here a little bit. I'll have to give you a more detailed analysis. I haven't yet gone over the charts. All I'm looking at and trying to say here is I think right now the risk to reward in gold is to the downside, meaning the next 5-10% move is probably to the downside before the upside, or maybe it's dead money for a while, trade sideways as we hit that resistance level. 60-minute chart. They seem to load slow every time I'm using this screen capture software. Just give me a second here. There we go. All right. We had this falling channel on the 60-minute, bullish divergences at the low. Trend indicators were bearish at that point, but then flipped to bullish. And now we have negative divergences. You can see here. I don't have it drawn out on the histogram, but prices are moving up. So this is an ascending price channel here. You have these two parallel lines. We could even extend this one back a little bit, but yeah, you can see that's essentially what gold is doing, moving up in this channel. We're at the top of that channel. This was a gap target zone I listed before. We actually took out the top of that gap, but as I showed you on the daily chart, we're still right at close to resistance, and we also have this negative divergence on the 60-minute time frame, as well as being at or very close to overbought levels on the daily. So again, gold, in my opinion, at least needs a little breather here. Now let's look at the miners. They as I always say, ultimately they will follow the metal. But sometimes there's some short-term disconnects. Sometimes one will lead the other. And, you know, I mentioned recently in my last update that it was pretty constructive because we had taken out this downtrend line and gold was, or GDX, I'm sorry, was consolidating there. It had gotten a little ahead of itself in percentage terms compared to gold. And this was all healthy price action. We've consolidated in that T1 zone, popped above it today. Which some might construe that as a bull flag if you drew it out here. And it may be, but I'll tell you, there's some bull flags fail, and for the reasons I mentioned before. So this would be your flag pattern. This would be a flagpole. And, you know, I'll play glass half full here. Like I said, I took profits. I didn't short it. Often if I really have a strong conviction on a pullback, and I still may, depending if I review these charts further tonight or in the next day or two, take a short position for a pullback trade. But you know, it is possible to see GDX and gold continue higher if gold wants to blow right through that level. We've seen it do it before. It did it at the beginning of 2016. We had that monster run. So what it would look like is something like this. This is a flagpole. This line up. You take the flag right here, bull flag, and you take the distance of the flagpole, which I just guesstimated there. And these are all levels, significant levels in GDX. So there's a bullish scenario that we break out, which we sort of have today by a small margin out of that bull flag, and continue on. We did have bullish divergences at the low on the daily time frame, which is significant. So that is certainly a possibility, one I wouldn't rule out. And again, one reason that I'm not a big fan, or at least at this point in time, looking to short. And if that changes, I'll let you know either on the front page or in the trading room. 60-minute chart, this is what it looks like. We had a divergent low recently right here. You can see the bullish divergences. Those played out very well for a move up. This chart was posted, you know, recently in the last week or so. Broke down, back tested the channel, but the price action, you know, GDX has been pretty resilient. That breakdown of this uptrend line, which was fairly well defined, sure didn't play out for a whole lot. Back tested, even came back down. So we're challenging that level. If you look at this line here, let's give you that box over here, about 2350-ish, give or take, maybe a little higher. That's a pretty decent resistance level. It's just a hair above that previous reaction high. And if you go here to the left, you can see numerous reactions. In fact, that's a line I've had on this chart. I created that line all the way back in November 29th. So you can see it's pretty much held up as a significant technical level. All right, let's get away from the miners and look at silver real quickly. And silver has played out nice. We hit the second target. This is that support buy zone for silver that I had. We went right to the low of that. So that's been a nice move for those of you that just like to trade the metals, almost 10%. And there's platinum, of course, PPLT. This was, as I said, right around the beginning of the year, my favorite of the metals. Looked really good. Nice clean pattern, bullish falling wedge, right to support. You can see how well-defined support. Break out of the wedge, actually gapped out of the wedge, and that one's already run up, you know, almost 12%. And, you know, so if the metals pull back here, maybe a pullback to this T1 level, first target level around 91.43, and then ultimately push up to any of these targets. But still, the longer-term outlook is still good, so you just need to define your trading style. If you're an active trader and you want to game the pullbacks, either book profits or even reverse your trade, go short. But if you're a longer-term investor or trader, the charts still look constructive. You just may want to ride out the pullbacks, or add on pullbacks to support levels. Okay, well, let's see how to do this. We're on the metals here, so why don't we just jump over and stick with commodities for a second, even though these are different types. This is ag commodity. This is an official trade. I just posted on the front page an update. WEAT is the wheat ETF fund, or it's actually an LP, I think, a limited partnership. It's done well. Bullish falling wedge. This is the one I said was one of my favorites, and as such, I put it as an official trade idea. There's some other ag. I like a lot of the ag commodities right now, especially the grains. But so you can see we gapped above the first target today. I think we opened at 630, and the chart looks good. This is a fairly significant level if and when we get up here to T2, which I expect 738. Remember, I set my price targets a little below the actual resistance level. This line's at 742. Some resistance there, and then a even more significant resistance zone, I call it. So I set the uppermost target at this point at $7.61, which should be just below that level there of 765. But I think over time, and I made the case looking at weekly charts and long-term charts on wheat when I put this trade up early in the year. I think it has the potential to go up here, no problem. So this is also a long-term trade. Now, a little side note here. When I put the wheat trade up, I think it was January 3rd, if I'm not mistaken, I went to buy that in one of my IRAs at Interactive Brokers, and for the first time, if you trade with Interactive Brokers, they are now managing their own. They're the custodian of their own IRAs. They used to farm that out, and they rejected that trade because this is an LP. You couldn't buy it. So I bought that in my trading account, and I have other IRAs that still let me do it. But I also put this one in that account. And as I mentioned, DBA was an alternative, and it gives you a little more diversity because wheat, you're trading one commodity. DBA has various different agricultural commodities. It's the PowerShares DB Agricultural ETF Fund, exchange traded fund. You can see beautiful price action. Bullish falling wedge. Again, this was posted earlier in the year. A breakout, and just look at that impulsive price action, nearly straight up. So we hit that first target level I had here, and we're above it now. There is some resistance coming in overhead around 2105. And then 2130, but I just wanted to point that out, especially for you guys that trade with any brokers that might reject these, because those LPs, those partnerships or master limited partnerships, I think they're called, they send out those quirky K1s. If you've traded them before, you know what I'm talking about. They come out late in the year, and so this is an alternative if you can't trade wheat, or you could always trade wheat futures if you are good with experienced with futures. All right, a couple other names. I talked about the casinos today. I didn't mention this one today, but so far Las Vegas Sands looks good. I pointed out this divergent high before. It had a sharp drop. I can't recall. We might have had this as an official trade idea. It was certainly an unofficial, and I remember a couple traders catching that big move down right after I posted it there. So what the stock has done, just to give an update, this was a pretty significant support level, 56.35, that yellow line. You can see a lot of reactions there, reactions to the left, and we broke below it. We hit this target I had down here, this horizontal line at around 53.12, and we've come back on several attempts and have failed. We had an intraday attempt, fell back below, so we keep failing at this former support, now resistance level. And as I mentioned, I think the casino stocks are headed lower. There was negative divergence, everything else I mentioned. So ultimately, I think this one moves down to that 49.80 area. Isle, I posted this one today, Isle Capri. I was just joking around, having some fun with the stock, so I named it Isle of Crappy or something like that on the front page in that post. But I do like the trade. It's you can see a divergent high, bearish rising wedge pattern. There's the negative divergence. 60-minute chart, you had the support level here, 23.82. We've taken that out, and stock's down pretty nice today. And this is my minimum target right here. You can see that's just a very thin zone, 22.56. Let's see what that looks like on the daily chart. 22.56, be somewhere up there, right around there. So this is a bigger picture. And bigger picture, I expect to move down, probably a reaction on this trend line on the initial tag, and ultimately see this wedge break. So to game this one, if you're really an active trader, and again, this is just my forecast at this point in time. This can change and will change if and when we get to this trend line. Let's say, for example, we have bullish divergences on a 15 or 60-minute time frame, then I might expect a bounce. Otherwise, we may not get a bounce. We could just go right through that trend line. But at this point, I'd expect at least a reaction there, and it could go on further. But it again depends on what the sector's doing, what the market's doing, and most importantly, what this stock is doing. Then a move down, and any or all of these lines are potential target levels, and it just depends how ugly things get. But I do like that one. Personally short most of the stocks, or long most of the stocks I've covered so far today, if not all of them. MGM. This is another casino stock breaking down. I posted this one. There's your targets. Nice breakdown. Divergent high, bearish rising wedge. Not much else to say. What did I covered? Vegas, right? Yeah, I just covered Las Vegas and Isle. We'll leave it at that. There's a couple other casinos I'm watching. Semis, still very much think the semis are poised for a heck of a correction. And as I said in the trading room today to someone, you know, especially if the market rolls over, which I do think is about to do, and may have already started to do, I think the semis will lead the way down. So you get more bang for your buck being short the semis than you would the broad market. And that's almost always the case if you can pick a sector. You know, when you short the broad market, you short the SPY, for example, you're shorting energy and utilities, defensive stocks, value stocks, dividend-paying stocks. However, if you short a sector, especially one where there's most of the components are individual stocks move in close synchronicity, you can have a lot more bang for your buck, but that cuts both ways. If you're wrong, you know, the semis can go up a lot more. Had a couple trades on these. Some were early, some were stopped out, and some are still doing well and profitable. And there's the SMH. That's one of the proxies if you like to use ETFs. SOXX is another one. They all have the same story, divergent highs. I have different trend lines drawn. And then there's XSD, bearish rising wedge. I don't have the divergence drawn, but you can see it right there. Negative divergence, divergent high, smaller divergent high right here. And again, just a lot of room for these to fall. And one of my favorites, as you guys know, especially you that hang out in the trading room, AMD. This one, in fact, I did a whole video exclusively just talking about the history of this stock and the case for really, riding this one out. And, again, it depends on your trading style. If you're a short-term trader, we've hit this first target today. You can see that first target hit. And you could, game any of these targets. But if you're a long-term trader and you're willing to ride out the ups and downs, then this is the weekly chart. I talked on a 10-year weekly chart, and it shows you all the, when the technicals have been similar, when I'm talking about overbought levels, everything else. Visit that video. I don't want to get into it now. Point being, there is potentially a lot of meat on this bone. I'm not talking, 8, 10%. We're talking, 40, 50% or more, possibly. Depends, again, what the market does and what the sector does. All right, moving on. Checking my time. Okay, we're 17 minutes into this. All right, I can do a few more. Regional banks, I think, are worth mentioning. I'll mention Ozark today. It popped below this 51.50 support. I added that as a short trade, but I'm still confident. Pop back up, but it's a matter of time. These regional banks, they look like they're just clinging on for dear life. You can see the KRE, which is a regional banking ETF. This is a pretty key support level. And as I mentioned, most of the regional bank stocks almost the charts mirror each other when you go to the 60 minutes. So whether you're shorting, Ozark, Fifth Third, FITB, STI, you can name, there's dozens and dozens of regional banks out there. They all seem to move up almost from program trading after the Trump pump. All the beneficial things that were supposed to happen to the banking sector. And I'll give them that. This was a bearish rising wedge, negative divergence. They broke down and have moved sideways. But as I mentioned, sooner or later, all from sideways ranges, I can't speak today. Sideways trading ranges, you get a resolution sooner or later. And typically, the longer the range, that's fuel, the more powerful the move out of that range will be. So there's your sideways trading range. We have broken down. Let's see if it sticks. This market in the last couple of years has been one plagued with whipsaws. But if this sticks, and so far it's pretty impulsive. It's a 3.42% drop right now in the KRE. That's a pretty impulsive move. Looking for volume. Don't see huge volume today, but again, whichever way this one breaks, and I continue to favor downside. That's why I've been pointing these out. You're likely to see a pretty powerful move, and because of all the other points I've made, longer term charts, daily, weekly, everything else, I strongly favor a downside move. So there's KRE. Let's move on. Oh, speaking of that, how similar charts, IWM is chock full of regional banks. And as such, it's no coincidence that the charts of IWM look almost identical to the charts of KRE and all the regional banks. And so you have the same story. You have this, as I mentioned in my analysis recently, you have this sideways trading range, a pretty key support zone. There was a little brief false breakdown right here. And now we're flirting with the bottom of that zone again. These are all potential targets for IWM. Bigger picture remains pretty bearish. This isn't the chart I wanted to show you. I really didn't prepare this video for all my index charts. I have a lot of different boards. I'd have to find a clean one to look at. But either way, I do see some downside, especially in IWM coming up soon. While we're on the indices, let's just look at the Qs. I have many different boards for this one, but the story is the same. Divergent high, correction. Oops, wrong tool. Clear that out. Try this one more time. I've gone over this chart many times. Divergent high, correction. Divergent high, correction. Divergent high, correction. Divergent high. Well, you know where I'm going with this. And this is the yellow lines make a big bearish rising wedge. Just because we haven't had a correction in a while doesn't mean one's coming. In fact, it only increases the odds, in my opinion. If the charts change and the technicals change, if we didn't have the negative divergence, my opinion might be different. But I'm bracing for or expecting a pretty good drop in the market, and particularly in certain sectors. And I think 2017, at least so far the way I'm seeing it, will be a lot like 2016. It will be a trader's market, meaning there'll be money to be made on the long and short side. For example, so far in this video, and you know how I'm personally invested, I'm long gold and the precious metal mining stocks, long certain commodities like wheat and ag commodities, some dividend and value stocks like CCE, which I'll talk on real quick. Let's just cover the SPY before we get to that and try to keep this video, again, relatively short. There's the SPY. Here's an uptrend line we're watching. We had that false breakdown leading up to the elections and the surprise rally, but we've since broken down back below that rising wedge. I'm referring to these two white lines here. So you can see the price action. There's the breakdown and back test. And my expectation in the SPY is something like this, at least a pullback here to that 220 area to try to gauge it for you guys in percentage terms. That would be a 3% drop, certainly worth trading, especially on individual stocks. Again, when you go long or short the broad market, your gains will be a lot smaller than will on an individual stock or a certain sector, because you are shorting or going long the good and the bad when you trade the SPY. So if you're risk adverse, it's something you can trade. And you can also, make as much as you want. You can leverage, 3-time leverage ETFs, or you can trade, futures, E-minis, and have a tremendous amount of leverage. So if you get a 3% pullback on the SPY or the S&P 500 and you're trading the E-minis, well, you can do the math on how much you want to put in there. You can make as much as you want. But risk goes both ways. So just be careful, especially if you're not familiar with futures. All right. Let's see. Cannabis stocks, they deserve a video in themselves. There's so many. As you guys know, this was one of my favorites, has been a long-term trade for me. One that I took some profits on recently. I posted that back here. We fell just shy of that $3 target level up here. Hit 290 and change, and I was lucky enough to book some profits that day. But I'm still holding out for much more. I'm looking at this as a long-term trade. We had a divergent high. You can see it right here, the divergence, and at this point, and that played out, and it held that support level. Had a green line there at around 151 or so, and we had numerous reactions there or attempts to break below, which all failed. So that level contained ACBFF so far, Aurora Cannabis. and it's been moving up and still looks good. It's still up, well above where we first bought it, around 55 cents. So, that's, what is that, 200, about almost 300%. CVSI, somebody inquired about today. This is one I also like a lot, both fundamentally and technically. There's a lot of little, what I call micro levels. This is a penny stock, but these are all levels, and it pulled back to this support level. Here's a line I've had on the board for a while, and pulled back here, shot up, looks like a little bull flag action right around here, and a breakout recently, and it's moving higher. And again, each of these lines are resistance levels, and the only one I need to add right here is certainly a line at this level. I didn't have that on. That's about 98 cents. That's the reaction high here, reaction high here, and if I look to the left, I notice some reactions there as well. So these are all potential price targets, and I just continue to use keep it relatively light, spread it around. You don't know who the big winners and losers in this industry will be. There'll certainly be some winners and certainly be some losers, especially when you're dealing with penny stocks. So I sprinkle a little cash in these, and I try to position strategically. In other words, if I'm going to add, I add back on a pullback to support or a breakout above a key resistance level. Maybe it moves all the way up to that 98 cent level I just talked about, and let's fast forward a few months from now, consolidates under there, works off the overbought conditions, and it has a big breakout. That would be an objective time to add. All right, one other one that I own personally is a long-term trade and cover very often in the trading room, especially, is Cara, C-A-R-A, Cara Therapeutics. The symmetrical triangle, this white line, white downtrend line right here. The white uptrend line forms a symmetrical triangle. We broke out, back tested, and it seems to be moving higher, and these are longer term targets. So that's, again, not a pure play. They do have, it's a biotech company, and at least one of their products is based on cannabis. All right, a couple more and we'll wrap it up. AK Steel, I think, is something I just added as a short trade last week. So far, so good. This is a chart on the 60-minute, broke down. There's that support level at 975. We had this uptrend line, minor uptrend line, broke down, back tested. We also broke the 975 support. It's down 3% today, so we're clearly profitable in this trade so far, but I think it still has a lot of meat left to go on the bone. This is still a potential third target there. Again, I believe I did a video on the steel stocks, so there's a case has been made. Another one that I like to trade is X, and I think a few others on the site. Well, I know a few others on the site also mentioned trading X. So you see a lot like those regional bank stocks I talked about a minute ago, and a lot of things in the market. It's been tough trading, and this is why I often, for those of you who follow the site, I tell you in December, especially the last 2 or 3 weeks of the month, I try to step aside, do very few trades, because the market is usually whippy, plagued with false buy and sell signals. In this case, we just had a sideways market. However, X is now broken down below that trading range, or appears to be breaking down. It's not really moving down impulsively yet, but these are potential targets if you want to trade X. Again, I don't think I listed that as an official trade idea, but it certainly looks good all the way down. I didn't add it here. I'll tell you right now, my minimum target on the daily time frame would be about this 2770-ish level right there. All right, you see the divergent high and everything else. And I think that's it. This one I don't think it made it on the front page. In the trading room, I've posted CMRE, and there's a downtrend line. It failed at today. It's been doing well recently. 60-minute chart, 2-hour chart. You can see it. There's that downtrend line on the 2-hour chart. We zoom into a 60-minute chart, and you can see it's failed at that downtrend line, but these are support levels. So where I'm going with this one, it needs to take that downtrend line out. You can see the positive divergence at the low. Keep an eye on this one for a break of that downtrend line. Then the next target would be a backfill of that gap, 664. I'm referring to this gap right here. And then there'd be some additional targets I'd have to add. All right, I'm going to wrap it up here. And again, this was not an all-inclusive. I certainly left out some of the trade ideas. I still have some to clean up. I was lazy over the holidays, spent a lot of time with my family. Had some, a lot of traveling out of town, but that is behind me now. So I'll try to get those trade ideas cleaned up, meaning move out the trades that have already been stopped out or completed, and keep the new ones coming. If you guys have any questions, just give me a shout out in the trading room or on the contact form. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.